Welcome to the DeFi Standard, and this is Mickey B. Fresh. Today we're going to do episode 7, the Flare Time Series Oracle, and how you could earn passive income with your Spark at no risk. So going over here to a video clip from Hugo, who's the CEO of Flare. He's going to tell you exactly what the Flare Time Series Oracle is and how it applies to the Flare network.
Actual beating heart of the Flare network is in many ways the Oracle system called the Flare Time Series Oracle. Actual beating.
All right, so you heard it from him. That's now the creator and the co-founder of Flare, who's telling you that Flare Time Series Oracle, it's the beating heart of the Flare network. And now this is important because it replaces the mining and the block rewards for proof of work and for proof of stake. So this is the reward mechanism that replaces them. So when you delegate your vote for your Spark, you earn rewards from the Flare Time Series Oracle. And we're going to go into that a little more in today's video, exactly how that process works and why are oracles so important in crypto assets and blockchains in general. So the Flare Time Series Oracle is the decentralized on-chain mechanism that provides time series data estimates to the Flare network to ensure accurate pricing. Now, this is very important to the FAsset protocol. So these FAssets that are being brought over, say it's FXRP from the XRP ledger, say it's FLTC from the Litecoin blockchain, FBTC from the Bitcoin blockchain, need to have 2.5 times their value in Spark as collateral held by the FAsset protocol. So to do that, you need the most accurate real-time data for these actual assets to the Spark price so it could manage that collateral. And the system manages that in a slightly autonomous way, and the agents hold the collateral. And that's part of the FAsset protocol. Now, the Flare Time Series Oracle is built in to the protocol layer. And let's read some more about that now. And this is the website, DeFi Standard, and Patty XRP has put a lot of effort into building this website up with myself and the content in here. So you should check it out. It's the defistandard.com. And there's great blogs on here. There's a lot of voice notes. There's some great video clips. And it's a great resource if you're looking to find more information on the Flare network and DeFi, or if you want to share it with other friends and family members and associates that are also interested. All right, so moving on. The Spark token, also known as FLR, comes with 2 detachable features, with one of these serving as a way to provide price data estimates to the FTSO. Spark holders who provide accurate price data estimates to the FTSO will be rewarded with additional Spark through the FTSO inflation mechanism. Aggregating external price data onto blockchain has been penned as the Oracle problem, which Flare aims to solve via the FTSO through incentives and decentralization. So this mechanism is the exact opposite of, say, how a network like Chainlink manages price feeds. Now, Chainlink their price feeds could actually be utilized on Flare, but they have to go through the Flare Time Series Oracle. So, unlike proof of stake networks, Flare network rewards for accurate pricing instead of using value to secure accurate pricing, like in proof of stake. And then you have to trust that entity because they put up stake and then they can be slashed. So there's no slashing on the Flare network. And that's very important to know. Everything is based on an incentive. So accurate price feeds, only the 50% of the accurate price feeds will go through the FTSO. The other 25% on the bottom or too high will be removed. So what this does is it creates a competitive marketplace for signal providers. And we'll get into that later in the video. So these are some of the examples of the data time series of the price feeds that will be available with the FTSO. So we'll have XRP USD, Flare XRP, Flare BTC, Flare LTC. Now BTC is just shown here because it's it's probably the next future FAsset and probably the biggest of them all after XRP. But you could add Doge to this list. This was just an earlier blog. Now, why the need for the FTSO? The Flare network is built to be a decentralized blockchain. However, the smart contracts on the network to properly function, it has to rely on external price data that may be centralized. If the Flare network were to utilize and exchange this price data, then this would render the system centralized itself. Thus, the Flare team built the Flare time series Oracle as a mechanism to decentralize the price data estimates coming onto the chain. So the Oracle problem, how it's known in the blockchain and has yet to be solved, Chainlink has not solved it, BAN has not solved it. Vitalik has even said that, and that's built on Ethereum. Where Flare builds in this Oracle system at its heart, at the protocol layer, built into the network in replace of mining, in replace of block rewards. And now this allows a competitive marketplace of signal providers to compete for the best price feeds. And this is how we get the most accurate data into the network. So all other applications that are built on the Flare network, their smart contracts are going to be able to utilize all this data. So they don't need to pull price feeds from Chainlink and Band or whatever outside price feeds. These are already going to be on the network, on the protocol layer. So those smart contracts of those new applications that are built, say they be Flare Finance, say they be other applications, say a collateral deposition, for example, that uses FAssets as collateral to mint a stablecoin. They would need those price feeds. And David Schwartz talked about that in his stablecoin proposal and how important it was to have accurate price feeds and not just from one centralized entity, especially the issuer. Now, by bringing these decentralized price feeds in, it allows for an abundance of applications to be built, all types of financial products. And DeFi could go to the next level now because there's no more trusting oracles. The oracle is on the network. It's built into the network. So everyone could trust this decentralized data. Now, price feeds are only the first thing that will be brought onto the network because they're critical to the FAsset protocol. So who contributes to the FTSO? It could be Spark token holders and also FAsset holders. Now, the Spark token holders are the ones who were able to earn rewards. Now, you could either provide a price feed or you could delegate your detachable vote. So now each Spark token comes with a detachable vote that they could delegate to a signal provider. And they could delegate maybe 50 tokens to one signal provider, 50 to another, 50 to another, 20 to another, depending on who has the most accurate price feeds and will earn the most rewards. And also, they will be taking a commission. So we know of a couple signal providers that have already been announced: FTSO.eu, Scandi Nodes, and Flare Fusion. And we also expect some exchanges to be signal providers, and other entities will be announced at later dates. Now back to the Spark yield earning. So as Spark holders, we're going to be at no risk, and this is very important, at no risk to your tokens. You could delegate your vote. There's one vote per token you have. So you delegate that vote to a signal provider, and then you earn the rewards. Those rewards are going to be the highest in the first 6 months. It's going to be 10% of the total supply, which is 100 billion. So 833 million Spark rewards will be generated every month, and rewards going to be probably on a daily to bi-daily basis paid out, and it's most likely that these rewards will be able to be dropped right into your non-custodial wallets, even if you're delegating. Now, exchanges will offer services that maybe will allow you to just delegate right to them on the exchange. Then they'll be non-custodial, which is what we're discussing here, is how you could just keep your Spark token in a non-custodial wallet and you could delegate the vote without any risk to your tokens. Now, even on top of that, you could simultaneously stake your Spark token with agents to support the FAsset protocol and earn the underlying assets to the FAssets. So you could stake your Spark and earn XRP, earn LTC, earn BTC in the future. And simultaneously, you'll be able to earn the Spark rewards from delegating your vote to a signal provider. So now at the protocol layer, we're able to earn two types of yield, XRP and Spark. Now I say it's going to be the highest early on because that's when the least participation is going to happen and the rewards are going to be the highest. So the benefit here is to act early and to participate. Now, these are inflation rewards, but they're not the same type of inflation that just gets put on the open market to sell. The rewards are going directly into the wallets of those who participate. And now with those rewards, which are in the form of Spark tokens, they could then have more votes to delegate to earn more. So it's not like they're going to earn those and then just dump them on the market because they come with yield. So why would you sell something that could earn you more of something? And this is that feedback loop. Those who don't participate do not earn. Those who are on exchanges, swing trading, trying to trade and make a quick buck, they're not going to benefit. And it's going to drive demand from outside to buy Spark tokens so then those people can participate. And maybe those who already are participating want more Spark tokens. So this is going to drive the value. And simultaneously, Spark is being staked in the collateral system to back the FAssets. So those are the two types of massive utility. Now, Bitcoin and XRP both don't have that in their native form. And this is why Spark is going to be a very different type of asset. It's going to give the TA people a lot of trouble trying to figure out because the price is not going to be based on all speculation. Out the gate, it's going to have this utility and this demand. And then also this yield. So now you have the three things. Scarcity is no longer the only thing that could raise value. It's actually the least. Utility, storage demand, yield. Those three are the magic combination. All right, now we're going to move along to go into more of the FTSO here. With these signal providers, and there being many of them, it's going to create a dynamic marketplace which will be created by signal providers to accrue more voting power, resulting in payment to FAsset holders delegating their votes to a signal provider. So now that's what we're going to go into here. If you have an FAsset you own, say FXRP, FLTC, FBTC, FDoge, you also have a FTSO vote attached to that FAsset, but you don't earn rewards for delegating that vote. But you can be compensated from the signal providers for delegating that vote because the signal providers are looking for more voting power and they could compensate you for that. So FAssets technically have three ways to earn. All right, now I'm going to talk about the inflation here, and we kind of touched on that earlier. The Spark tokens also come with a governance vote. So there's two detachable votes. We covered this in previous videos. If you wanted to watch, we have the one on the Spark utility, Spark token utility, and then the FAssets utility. Those were roughly around a week ago. So we talked about the 10% of the 100 billion, and Flare is serving as a deflationary asset. So even though the supply will be increased from the inflation rewards, that will be a governance feature. So it starts out at 10% the first 6 months, and then after 6 months, there'll be a governance vote. Maybe it goes down to 5%, and then maybe in 6 months, it goes down 2%. But that inflation is going to those who participate, and it's adding to the robustness of the Flare network as a decentralized data provisioning network by bringing in these accurate price feeds, which is very, very important. Just wanted to touch on one more thing over here with the FTSO breakdown. Now I'm going to post these links in the video below, in the comments below, the blog, and also this is the blog from the DeFi Standard, and then we also have the blog from the Flare network. So crucially, it transfers value from people who do not participate in the system or who participate in a malicious fashion to the people who provide utility to the network. So you're providing utility to the network by delegating your vote. And you're going to be able to do this right from your non-custodial wallet. We just don't have the exact details of how that does work. And now this is going to create a huge marketplace for signal providers who are going to provide all types of data. It's just going to start out as price feeds, but in the future, we're going to see other types of data come into the network. So we look at the XRP ledger as a liquidity network. Now, as the perfect complement to a network like that is a data provisioning network. They say data is the new oil, and Flare is the data provisioning network. And here's a little diagram they show us of, they show the brain as a representation of what the FTSO is, because really it's just breaking down the prices to be the most accurate in real time. So you think of something like Fiat Leak, which pulls price feeds from all over APIs from different exchanges. Flare is going to be able to break these down to the most accurate prices. So price discovery for XRP USD is going to be the best coming out of the Flare network, more so than looking at CoinMarketCap even, because you know this data is going to be the most accurate because it's decentralized and it's removing the higher levels 25% and the bottom, and it's bringing together only that 50% in the middle and to the most accurate. So, and this will give rise to the potential for a marketplace of signal providers with various different FTSO signal providers acting on behalf of token holders, each submitting prices according to their own methodology. Furthermore, such an ecosystem could be further leveraged by any decentralized application on Flare. This is a very powerful system, more so than mining is and block rewards, because you don't need the native token to secure the network. You could utilize it in other ways. And this is a breakthrough in network design. Like some DApp tokens I know offer that, but they are built on other networks. This is going to drive a huge marketplace for other decentralized applications to be built on it, on Flare. And you can see all types of decentralized derivatives and other DeFi protocols. And then we'll start seeing issuances of bonds, tokenized commodities, and then we'll get those prices on. And this is institutional grade. Like, these prices can be trusted. They don't need just one central entity. And this is going to be able to be used by retail and by institutional, once again. I'm Mickey B. Fresh, and I'm out.